Thanks for joining me on my market report. My name is Mike, and my market report is on mortgage rates. We get into discussing what's impacting mortgage rates on a daily basis, whether it might come from the economic calendar, headline news, geopolitical, combination of of those items, or even sometimes market sentiment changes. Good news is now bad news, and vice versa, and that could be really confusing out there for those who may be kind of just watching the markets and not really fully understanding what's going on out there. So we try to get into what's in the minds of the investors and why they're doing what they're doing, and hopefully give you the information you might be seeking. So if you're looking to refinance or purchase, you might be following rates, and hopefully these videos will give you some guidance as to what's going on here with the markets. A little bit about myself is I am a loan officer. I do work with a national lender. We do loans in all 50 states. Love to be able to talk to you if you're looking to refinance or purchase. But more than that, we like to be a resource for you guys. So if you guys got questions about anything, we're here to try to help you out as much as we can. Uh, so without further ado, we'll jump right into it. Normally, I start off with the economic calendar, but as I indicated yesterday, it's going to be a very light this week. There will be one impactful report coming out, and that will be on Friday. That's the CPI, as inflation is obviously a hot topic in today's current market state. So until then, we won't have a lot. So a lot of our news or a lot of our impact will come from the news out there, headline news, or probably geopolitical stuff like that. And of course, right lately we've been kind of following the stock market for the most part. So yesterday's stock market was up, and we were down. As you can see here, mortgage-backed securities, it was closed down 53 basis points. Today it's the other way around. Stocks are down. A lot of it has the sentiment got renewed. Target issued against further profit outlooks, and so they are taking measures. So kind of reiterated the the state of the economy, or at least where it's going, especially with the Fed current tightening of their policies. And so, of course, stock markets are in the process of selling today. So yesterday we did break below the 25-day moving average. However, today we're fighting our way back above it. We're just barely above it right now. 25-day moving is at 99.59, and we're currently at 99.63. So we're up just a little bit over the 25-day moving average. That could definitely help us improve rates. So most of the losses we incurred yesterday for uh, our pricing and terms, we got a lot of that back. Not quite all of it yet, but we got quite a bit of it back um, in terms of where we are in pricing. So pricing today is better than where we left off yesterday. However, not quite the same as where we started the day off, unless we can continue down this trend. So right now we're just, I think, up 43 base points. Now we're about up 38 base points. So we're kind of fluctuating a little bit here, and we'll see if it can strengthen up a little bit more over the uh, later on here. But if you recall, as the 20-50-day moving average is getting a little bit lower, at some point, once we get in this range, we're going to need to either break above that, or we're going to get squeezed and we can get pushed lower again. So this is at some point in the very near future, this is going to come to a crossroads, and we may get, if we are caught in the middle, we'll be forced to go one direction or the other. So obviously, for those who are looking to uh, refinance or buy, are looking at for better rates, so we're looking for this to rise. So typically on a chart like this, we are looking for this to go upwards, unlike our counterpart, the yields, where we want yields to come downwards. Let's take a look at yields. Speaking of such, and yeah, like I said, as I indicated, we pricing is a little bit better today. Not quite as where we started the day yesterday. However, again, better than where we were at the close of the day. Yields are working its way back downwards. We're still above its 25-day moving average, but below the 3% level, as we broke above 3% yesterday. Right now, we are at 2.98 level right now. All right. So lastly, we'll go over the average rate for conforming loan limit. We'll start off with 30-year fix, which is at 5.5%, and the 15-year is up to 4.84. And again, these are basically uh, a day behind, and they do have points included with these. So these are kind of the national average that's found out there. And of course, every rate is a little bit different for each person, as there's a lot of variables that go into it. It could come from, again, the type of property, to occupancy, to credit scores, to equity in the property or down payment, stuff like that. So If you guys would like a rate quote, please feel free to reach out. We are here to help you guys out. If you guys are looking to, again, if you guys got any questions, we're here to help you guys. So please feel free to reach out. Meanwhile, if you guys like these videos, please help us out. We'd greatly appreciate if you guys can share and like these videos. It helps us get a little bit more attention out there and hopefully help us grow the channel. You guys have a great rest of your day. Thanks so much for watching. I look forward to see you guys in tomorrow's video. Bye-bye.